Hey everybody, welcome back to another Duckett Ladd Tax Tip Tuesday. Jared Duckett back at you with my business partner Buzzsaw. How are you, my friend?
Good. How are you doing, Jared?
I'm doing good, man. I think we're gonna keep diving in. We're hitting you guys a lot with these vehicle videos. I think this is number 3, but we're gonna do 5 of these, and you're probably like, geez, that's a lot of vehicle. Well, it is. It's in depth, you know what I mean? But really what we're gonna do, I guess let me just recap the first 2. And I will say real quick, if you guys are seeing the video for the first time, um, first off, go back and watch our other 2. And I've had clients and other people reach out and said, hey, I missed the second one or whatever. So like our YouTube page, subscribe to it, click the little notification button too, so you guys see when these things come out. You shouldn't miss them. But anyway, going back, first one, Buzzsaw, if you remember, we just basically hit a high level, like, can you write off your vehicle in your I'll say job. Dove a little deep into W-2, how that works, but really we're now speaking, to the dental practice owner here. Second video, we kind of got into, okay, how do you utilize your vehicle and what method do you use? And we went down into the standard mileage method because there's 2 different methods to use, right? We went into the standard mileage. It's pretty cut and dry, but what that means. And so today, Buzzsaw, let's just kind of unpack the actual method. And so we're going to unpack that for you guys today. And then in episode 4, we're going to dive into the depreciation aspect of the actual method. And then the finale, if you will, of this amazing 5-part series is going to be a case study. So Buzzsaw, I'm going to throw it to you, man. Actual method. Let's dive deep. What expenses you can take, how it can work, and that sort of thing.
Yeah. So the actual method is the one that we kind of hit on last time that allows you to deduct the actual expenses of operating a vehicle. And this is when last time we talked about keeping all of your mileage and, knowing what was business mileage, what was personal use, and how all that comes into play. And so the first thing you have to do is you have to kind of know that ratio of your business to personal mileage. So in our example, we said we drove 10,000 miles, 5,000 of it was business, 5,000 was personal. It made it easy 50-50. So what you would do is over the course of the year, you would keep very good records of all of the actual expenses that you had on your vehicle. That's gas, that's maintenance, that's oil changes, tire changes, all the typical costs of maintaining a car. And then if half of your miles was for business use, then you could deduct half of all of those actual car expenses as a business expense.
Yeah. So, and I will say, we brought this up in the last video, but I hear this all the time with business owners about tracking mileage. Okay. And I want to just reiterate this point, because I hear it all the time. Well, Jared, I use the actual method. I don't have to track my miles. I don't have to track my miles because I don't do the standard mileage method. That's not true. Okay.
No.
You have to track your miles to justify the business use portion of that vehicle. Right. And so that's first and foremost. The second thing I'll say that just hit my radar is we'll get into what expenses are in the actual here. And Buzzsaw, I think we can go down through a list here in just a second, but it is a bit more cumbersome, I would say, to do the actual method. Now, sometimes, and we'll get into the case study, sometimes the actual method's more advantageous, but it is more cumbersome because you don't just have to track the mileage, you have to track the mileage plus keep track of those actual expenses. Does that make sense? So Buzz, I'll dive in. What actual expenses, you might just name off a couple if you will, but what actual expenses are we talking about?
Yeah, so this includes, the gas. Every time you fill up, keep those receipts, mark them down. Your oil changes, your general maintenance, tires, the general, what you spend on your vehicle can then translate to a business expense for that portion that you drove your vehicle for business use. So it's important to keep all of these records. It is a lot of work, but it can provide a lot of good tax savings, come tax time.
Yeah, so just think if you got to put new tires on that vehicle, right? Or if you had an alternator go out and you have to do some maintenance to it, those oil changes, all those things that are expenses actually incurred with operating that vehicle, you have to keep track of that stuff. And once you come up with a total and bring it to your CPA at the end of the year, they're going to ask, okay, what were those actual expenses? Let's say 12,000 bucks, I'll say. And then they're going to say, well, how much of that is business use? And again, I'm reiterating this point. You can't just say 75%. I guess you can, but that really doesn't work. There's no justification for it. You got to show your mileage log, which shows the business use percentage and so forth. Does that make sense, Buzzsaw?
Yeah, yeah. And you hit on this with depreciation. That is another one of these expenses that you can take with the actual method, and it probably will provide you the biggest benefit. It's probably the biggest benefit of doing the actual method is if when you actually purchase a car that's, you know, new to you, you can start to take depreciation on it. And we'll get into that next week, but that's one of the biggest benefits of doing the actual method.
Yeah, 100%. And that's kind of a segue into next week's video is, in addition to these actual expenses, you then put the depreciation in there as well. And we're going to create a separate video. We're going to make you guys wait on the depreciation. But it's just confusing to a degree on what methods and all that stuff. So we're going to talk about that next week. But long story short, this is just a recap of the actual method. It's all the actual expenses incurred times your business use percentage of your vehicle, and then the depreciation, which we'll talk through next week. So any further comments, Buzzsaw, before we hop off here?
No, I think we covered it.
Okay, perfect. So guys, stay tuned next week. Again, click the notification button, like this thing so you guys get this stuff and we don't, you guys don't miss it. But next week, we're going to talk about depreciation specifically on the vehicle. And then the fifth week, the finale, we're going to do a case study. Hey, bought a vehicle, X amount, blah, blah, blah. And we're going to run through spreadsheets with you guys to help you figure out which one makes the most sense. And we'll actually, but I guess we can give that spreadsheet to him, can't we? Buzzsaw,
Yeah, sure.
maybe just put it in the video. Okay, cool. Well, Buzzsaw, appreciate you as always, my friend.
Yep.
Wealth of knowledge on the tax side. If you guys have any questions on this, send us some comments and we'll try to get back to you as soon as we can. But anyway, we'll let you guys go. Buzzsaw, have a great day.
All right, you too.
We'll see you guys. Take care.